Welcome to the deep dive. Today, we're getting into something pretty intense. The massive, truly massive infrastructure costs facing AI leaders.
Yeah, specifically OpenAI.
Yeah.
And it's not just about the money. It's spun into this big public debate about government support. It all stems from some pretty high-profile statements.
The numbers are just mind-boggling. We're talking about OpenAI looking at commitments, things like chips and data centers, adding up to around $1.4 trillion over the next 8 years.
1.4 trillion. It's huge.
It really is. And then you compare that to their current revenue run rate, which is what, about $20 billion a year?
Exactly. That massive difference, that gap is why this whole thing blew up. Suddenly you have OpenAI execs talking, proposals flying, instant backlash clarifications.
So that's our mission today, right? To unpack this whole sequence. Should taxpayers be involved in funding this AI build-out? Was that even really the ask?
Yeah, we're going to track the money, the arguments, the sort of free market pushback from some big names in tech. It's quite a story.
Okay, let's start at the source. The trigger moment. It was OpenAI's CFO, Sarah Friar, speaking at a Wall Street Journal event, wasn't it?
That's right. She was pretty open about the scale of what they need. Huge data center build-outs, massive commitments for, power and hardware usage.
And she gave a reason for needing help tied to the tech itself.
She did. She basically said, look, our goal is always to use the latest, greatest chips for our cutting-edge models. That's how you stay ahead.
Makes sense. In AI, if you're not on the newest hardware, you're falling behind fast.
But she admitted, compute is a constraint. Cost is a huge factor, so sometimes they have to use older, cheaper chips just to make the finances work, which isn't ideal for pushing boundaries.
So to get those best chips and bridge that $1.4 trillion gap, she floated the idea of an ecosystem of help.
Exactly. And that's where it got specific and controversial. She pointed toward the U.S. government, asking for a backstop, maybe a guarantee for the loans needed for this infrastructure.
Okay, backstop. We need to be really clear for you listening what that actually means.
Yeah, fundamentally, a backstop loan means the government guarantees it. So a bank lends OpenAI the money. But if OpenAI, for whatever reason, can't pay it back.
If the $1.4 trillion bet doesn't pay off, then the taxpayer's on the hook. That's the core idea.
And why would OpenAI want that? I mean, if they're confident, why not just get private loans?
Because it makes getting those loans way easier and cheaper. If the government guarantees it, the risk for the bank lending the money drops dramatically.
So the bank gives them better terms, lower interest rates.
Precisely. Lower cost of borrowing. But maybe even more importantly, it increases something called the loan to value, the LTV.
Right, LTV.
Yeah.
Financial term. Break that down.
Sure. It's just the size of the loan compared to the value of what's being bought, like the data centers. With a government guarantee, banks feel safer lending a much bigger chunk of the total cost.
So OpenAI wouldn't have to put up as much of their own capital up front? Makes financing that huge $1.4 trillion number seem a bit more achievable, I guess. Exactly. It lets them take on more debt more easily. And Fryer didn't just, toss this out there as a vague wish.
No, she implied talks might already be happening, didn't she? Mentioning the government understanding AI as a national strategic asset.
That phrase is key. National strategic asset. It's framing AI infrastructure like it's, essential military tech or building roads, things the government does sometimes support financially.
That's a bold framing, though. Is a private company's data center really the same as a national highway system? Where's the line? It feels like a big political gamble to make that argument.
Well, the market and the public answer that question almost instantly.
Yeah.
And very forcefully.
Yeah, the reaction seemed pretty negative, right? Scoffing online, commentators jumping.
Oh, absolutely. Immediate backlash. It really tapped into sensitivity about, corporate bailouts, especially for a company seen as already pretty successful and well-funded.
So the strategic asset argument didn't land well at all.
Not at all. They had to react fast. Fryer went on LinkedIn, basically walked it back almost immediately, said something like, OpenAI is not seeking a government backstop, and that using the word backstop had muddied the point.
Wow, that's quick damage control. But the cat was kind of out of the bag, wasn't it? Other people started weighing in.
Definitely. The conversation exploded. And you got some heavy hitters involved, like David Sachs. He's a big name in venture capital, known for his strong free market views.
And what was his take?
He just completely rejected the idea. Posted on X something like, no federal bailout for AI, full stop.
What was his reasoning?
Pure competition. He argued, look, the U.S. has maybe 5 major AI companies pushing the boundaries. If OpenAI makes a bad bet, if this $1.4 trillion plan fails, well, others will step in. The market works.
So failure is just part of the game. Asking for a bailout is, what did he call it? Ridiculous.
Yeah, pretty much. Let the market decide who wins. He wasn't saying the government has no role, though.
Oh, what role did he see?
More about clearing the path, not paving it with cash. He suggested the government should focus on making things like permitting and power generation easier. Basically, cut the red tape for everyone building infrastructure. Don't just subsidize one company's debt.
So deregulation, not direct financial support. Interesting. And then the CEO, Sam Altman, he stepped in too.
He did, with a pretty lengthy post on X, essentially doubling down on that free market stance, echoing Sachs, and really slamming the door shut on this whole backstop idea.
What was his core message?
Very clear. He said, "We do not have or want government guarantees for OpenAI data centers." And he made a broader point, too,
Which was?
that governments shouldn't be in the business of picking winners or losers, and importantly, that taxpayers shouldn't have to bail out companies that make bad business decisions or otherwise lose in the market.
That's a strong free market statement, especially from the leader of a company so central to, well, a potentially strategic technology. He also made a clarification, didn't he, about where guarantees had been discussed.
Yes, and this distinction is important for you to catch. Altman clarified the only time loan guarantees came up was in the context of supporting the build-out of semiconductor fabs chip factories in the U.S.
Ah, so making the chips domestically.
Right, which is a response to a specific government initiative, the GHPS Act, aimed at boosting U.S. manufacturing. He said OpenAI was happy to support that national goal, but they hadn't actually applied for that program themselves.
Why is that different? Fabs, data centers, it's all high-tech infrastructure, isn't it?
Well, conceptually, they're seen differently. A semiconductor fab produces a critical component, the chip itself. Building those domestically is seen as strengthening the entire national supply chain. It's foundational.
Okay, so that's strategic infrastructure in a widely accepted sense.
Exactly. Whereas a data center, even a huge, advanced one, primarily uses those chips to run one specific company's software.
Yeah.
It's more of a corporate operational asset. Altman drew a really firm line there. Support the national supply of chips? Okay, maybe. Subsidizing our data centers? No.
Got it. So summarizing the immediate fallout. Big ask floated, public rejects it, CFO walks it back, VCs criticize it, CEO firmly denies wanting it. End of story for the backstop idea.
For the backstop idea itself, yes, seems dead in the water. But
Huh.
the $1.4 trillion problem hasn't gone away. That funding need is still very, very real.
Oh.
Rejecting the backstop doesn't shrink the bill.
Right. So how does Altman expect to fund this astronomical amount without government help? He must have expressed some confidence.
Oh, incredible confidence. Almost breathtaking, really. He talked about revenue growth projections.
What kind of numbers are we talking about?
He stated they expect their annual revenue run rate, currently around $20 billion, to grow to hundreds of billions by 2030.
Whoa, wait, from $20 billion to hundreds of billions in about 5 or 6 years. That's exponential growth on a scale that's hard to imagine.
It is absolutely banking on explosive, transformative market capture. It implies AI becomes deeply integrated into basically everything very quickly. That's the only way you get those kinds of numbers.
Is that realistic, or is it just extreme optimism needed to justify the spending path they're already on?
It's definitely the definition of high-stakes optimism. But Altman did point to specific areas where they expect this massive growth to come from, sort of back it up.
Okay, where does he see the money coming from? What needs to succeed to pay for $1.4 trillion in infrastructure?
He mentioned three main pillars. First, their enterprise offerings selling AI directly to big businesses. Second, new consumer devices, which sounds like hardware, embedding AI into our daily lives. And third, robotics.
Enterprise, consumer devices, robotics, that's basically covering the entire spectrum from business software to physical interaction. It really is a bet on total market transformation driven by their AI.
It absolutely is. The financing plan relies entirely on achieving that massive scale-up, capturing huge chunks of global markets in the next few years. And all of that depends on having access to those latest greatest chips. It all ties together.
Okay, this has been quite the deep dive. So for you, the listener, let's quickly recap the takeaways. First, just the sheer scale of AI finance is shocking, right? $1.4 trillion. It sets a new benchmark.
Second, we got a crash course in what a government loan backstop actually is, why it's tempting for a company needing huge funds, but also why it's politically radioactive. Taxpayer risk is the key issue.
And third, we saw a real-time example of free market ideology being enforced, interestingly, by Silicon Valley players themselves. The pushback against any hint of a bailout was swift and decisive.
Yeah, the message seemed to be AI might be important, but companies still need to stand or fall on their own business decisions.
Which brings us to our final thought, something for you to think about. If the competition in AI is strong enough, as Sachs argued, to handle failures, and if companies can raise these trillions purely through the market based on projected growth,
And if the goal is always needing the next generation of chips, the most expensive ones.
then how insanely high does that growth have to be? What level of market dominance is required to keep funding this tech arms race without someone eventually coming back around to that national strategic asset argument when the next funding crunch hits?
That $1.4 trillion figure casts a long shadow, financing that purely on market optimism by 2030. The pressure is immense, and now it seems entirely private.
Definitely something to keep an eye on. Okay, that's all for this deep dive. Until next time, keep digging.